Shopify. Let's do the earnings trade. So this is one, Shopify has been really strong here. This is one we've already kind of took a look at pre-market, but I was thinking something like this 11 delta short put, which is very juicy. I mean, that thing, even if you just wanted to do one side, if you guys wanted to run the wheel, if you wanted shares of Shopify, and I'm not suggesting that that's what you do, but if you had that kind of inclination, right? Hell, that 11 delta put's paying $1.40 credit on a buying power reduction of 950. That's great. Now, why take 140 credit for 950 when I could double up the credit by selling the call, right? I'll go find similar price call, maybe go a little further on the call side since it's been stronger. Instead of going to like the 12 or 13 delta, go to the next strike, which is the 10 delta, still paying $1.10. Yeah, a 240, 250 credit, buying power reduction, $1,200. So the buying power increases a little bit because there was a little bit more risk on the call side here. But whichever option has the highest buying power, that's the buying power on the trade. So there's no harm in selling the other side. So when you find something with really good IV that's paying juicy premiums, it just kind of makes sense to sell both sides. Unless, again, you were mainly trying to run the wheel, then, selling the put by itself is certainly an option. Let's see if they'll give me 248 for this strangle. No, mid price is 246. Okay, give me 246 then. I'll take it. Well, they filled me at 247, so they gave me $1. Right. Got price improved. Thanks, TASTYTRADE. Yeah, sometimes it can be tough to decide, when to take a winner. Of course, generally speaking, you should have, some kind of take profit rule that you kind of always stick by, like the 50% rule that I tend to use. But even then, I take things off before it gets to 50% sometimes, especially quick winners. Anything that I make a, 25, 30%, in a day or two. A lot of times I just take that because it's quick and it's a high return on capital when you make so much so fast on a trade. It's just nice to take that quick win and then go immediately put that money to work in a different trade. Sometimes I take things off just because I need to free up buying power. Sometimes I take things off just because I think the risk on the trade is a little bit too much. If it's a position I worry about, then I'll take it off. Generally speaking, the rule of thumb is if you would feel better not having that position on, just take the position off, right? Go ahead and check out Shopify. Oh, not really reporting a real P&L yet because the option markets must not be open yet in it. And you can tell when if you actually go to the options chain, the stock market just opened, but the options markets did not open because we don't see any red and green yet, and now we do. Now we're seeing things actually starting to move here. And now let's go check our Shopify. Yeah, we made, well, right now it's showing we're making a 129. Let that settle down a minute. See if that's actually a real price. But that's about what I would have expected. I was thinking I was going to make 50% max profit in that one-day trade. That was just too good. You rarely get a strangle or an iron condor where things just don't move at all. It's very, a $3 move here is a nothing move because this thing was being priced like it was going to move, what, 15, 20 bucks. And we made our strangle super wide. I mean, I was $25 out of the money on the put and like $40 out of the money on the call side. Yeah, now it's showing me making 172. There's no way that's a real price. I got filled at it. I'll take it. So 172 on a strangle I sold for 240. What is that? It got to be like a 70, 75% profit in one day trade. So there we go. On a day where the market's down, right? We just realized $1.70 on something. Yeah, you closed yours for a 72% winner. Yeah, and that was great. That was absolutely a home run. It is rare. I mean, you often win on a strangle or an iron condor, these delta neutral strategies for earnings. It's not rare to win. But it's rare you get one that does exactly what you wanted it to do, which was not move at all. And when things don't move at all, volatility comes in huge. So you get the double whammy where Delta didn't hurt you, plus you get Vega coming in a big way. That was a really sweet trade. Yeah, wish earnings worked like that most of the time. Yeah, me too. Because obviously they don't work like that most of the time. I said this many times. These earnings trades, they typically, the winners and the losers, they typically just wash each other. Uh, you'll win on some, you'll lose on some. In the end, I don't think we necessarily come out ahead on these. Yeah, the earnings trades are just engagement trades, right? They're just trades to follow along with some of these events. They're kind of fun trades too, because somewhat, if you didn't do earnings trades every now and then, all you would be doing is the same trades over and over again. Your campaign trades on ES and SPY and things like that. Maybe running the wheel on a handful of stocks you always play. For me, a lot of the things I've played regularly over the years with, puts and cover calls, AMD, Coinbase, Nvidia, things like that, play the same stuff. So these earnings trades give me a chance to play tickers that, I don't play as often. And what else had earnings? DoorDash and Lyft, I don't even really have to look at them. I know liquidity kind of sucks in those. There was something else. Upstart, the liquidity is okay. I don't trade it much nowadays. I had a bad experience trading Upstart through earnings. I don't know, 3 years ago or so. It was been a while, but I lost a few $1,000s on something in Upstart. Even now, even though I haven't traded this thing in forever, just looking at the chart in the last year, you can see some of the crazy moves this thing can make. I'm sure that was probably an earnings event. That hurt a lot of people, that gap right there. See this gap here? That was probably earnings. This is one that can really sucker people because it's kind of almost meme-like, this stock. It has really good 108 IVX, right? So these premiums are so juicy. Like, I'd love to sell that 45 put, and I would love to sell. I can go all the way to the 110 call. You receive 265 credit, buying power reduction, $1,700. That all looks great. Is Upstart really going to move $40 or more up tomorrow? Well, if you look at the chart, I mean, I wouldn't rule it out. Right? So this is one that can sucker people in. And it wouldn't shock me if the thing came crashing down $25 just because the way it sometimes make these up moves, a lot of times it has to come back down to earth. If you go back and look at its chart, you see this run up. And then what happened right after? Wow. In 4 days, this thing lost more than half its value. More than a 50% move in a short amount of time. So this is one, the premiums look great. I just don't trade it anymore. If you're going to play this one, do something small if you're doing undefined risk trades. Or just do defined risk, right? Sell an iron condor or a credit spread. You can only get hurt so much on a defined risk trade. For me, I'm going to leave that one alone. DT, are you doing a wheel or a covered strangle on anything right now? I don't have shares of anything right now, so no covered strangles. As far as am I running the wheel, until I get assigned on something, I won't be running the wheel. Sell a lot of puts, but I don't get assigned. 95% of the puts I sell, they win, right? Probably because I sell my puts typically somewhere around the 15 delta mark, most things. Really high volatility stuff, I can get even further out on my puts, maybe a 10 delta put. I'm going to win, man, because I manage them at 50% max profit, which increases your win rate a little bit. I win more than 90% of the time probably on my short puts, right? That's just the way it works. So if I'm only losing on 10% of my short puts, some of those short puts that are losers, I mean, technically they're losers. I lose a few bucks, but maybe I just lose a few bucks, like $50, $100, the small losses. I don't necessarily have to take shares if I want to. Sometimes I just eat the loss or I roll out. Sometimes they're technically losers, but I roll it into the new position. So rarely do you just have to take shares unless something goes against me in a big way, like that GDX position that I was in where I was running the wheel on that recently. I just got out of that about, a week ago, 2 weeks ago. Before that, I was wheeling Nvidia for like 3 or 4 months there for a while in the middle part of last year. But those positions went against me kind of hard. I took assignment of shares because those losses would have been too great, so I just ran the wheel on those things. I'm not in danger of being assigned on anything. I have short puts on at AMD. Unless AMD really starts falling, I mean, this is a profitable trade right now. AVGO, I'm down on the position as far as P&L, but I'm $32 out of the money. Probably going to end up winning on that trade. Anything else that's a short naked put? That may be it right now. I don't have a lot of short puts. I have some short puts on in the futures, MES. But of course, if I get assigned on those, I would get assigned the futures contract. I don't think I can get assigned early on a futures, so I'd have to hold them to expiration. I never do that. Even if I did and got assigned the futures, yeah, I could run the wheel using the futures contracts. The wheel on a futures works just like the wheel on a stock. Only difference is instead of getting 100 shares of stock, you get one contract of the futures, but you can turn around and start selling calls on it and run the wheel on it if you want. But if we wanted to run the wheel on something, a lot of the companies I want to run the wheel on, the good companies, I like running the wheel on NVIDIA. It still hasn't had earnings, so I don't want to go sell a put on it for another 2 weeks. Coinbase I don't think has had earnings. Yeah, it reports this week, Thursday after the bell. We'll wait a little while before we play that again. Apple has already had earnings. Does it still have IV? It has IV rank of 30. IVX is not great. IVX of only 25%. I went in the 65-day cycle, and I can go sell a put on something. I can go sell the 12 Delta put for $1.56 credit, buying power reduction of $2,000. That's okay on a stock that's $231 stock. But as far as running the wheel, I mean, technically you could say that I'm running the wheel, but until I get assigned, the wheel never turns. I'm still making money though on all these puts. But 9 times out of 10, if you're running the wheel, you're basically just selling puts most of the time. You're only in the covered call portion of the thing a small fraction of the time.